Okay, it's the 14th of Feb. It's a Friday, and we've got about 25 minutes to the NY Open. Second, we'll get to the charts right now. Yeah. Okay, perfect. Just a second. All right. Just give me a second. Hmm. Just give me a second. Okay. All right. So let's start with the calendar. We're a bit late today, but that's all right because we have retail sales today. Um, Yeah, so that's the calendar. We've got retail sales in about 50 minutes from now, so there is plenty of time for analysis, right? That's the only news event today. Second, yeah, okay, yeah. So we've got about 50 minutes for analysis, right? Let's um, let's get to the daily chart. Yeah, okay. So yesterday's daily. Now let's go up a time frame and look at the weekly very quickly. So on the weekly, we are very bullish. We're pushing towards 2950. We anticipated this move right at the beginning of the week. Even last week, I anticipated 2950, and I said we could easily head to 3000. So that's likely what's happening right now. We are heading to 2950, right? Now, but keep in mind today is the last day of the week. You might have a pullback to create the weekly wick, the weekly top wick. That's possible. That can happen on a Friday, right? It's the last day of the week. The weekly candles you can see need that top wick. You can see the top wick, 192 pip wick. This is a larger wick. It's about a 250 pip wick. So weekly candles need that large wick at the top. So you might have a pullback today, right? Just keep that in mind because it's a Friday. That's very possible. Let's go to the daily because that's all the information we have on the weekly. The weekly is heading to to 2950. That's all the information we have on the weekly. So for more information, we got to see more candles. So let's go down to the daily. Daily, we've created a demand zone, a rally, two basin candles, and a rally. We've also created daily support. So we've created daily demand plus daily support. So we are very bullish, and we've created around 2900. That's an important area, right? 2900 is a very important area. There's a psychological round number there, plus there is daily demand right there. Okay, there's a zone there on the daily time frame. Now we've stopped exactly at 29.29. I don't know the heck, can't remember if I had this level yesterday on my chart, but this is the, I think I did. This is the new level. Again, these three levels are not confirmed yet. I would like to see more touches on the daily time frame. I would like to see at least two touches on the weekly time frame, and then either two touches, at least two touches on the weekly time frame, or 3 to 4 touches, or at least 3 touches on a daily time frame, right? So we just have one. We have one here. We have another one here. So let's see what happens at 2929, right? Now, as I said, I've said this all week. When I draw these new weekly SR levels, they're based off of the number of touches on the daily time frame, right? Or the daily, sometimes the 4 hour. If I can't see it very clearly on the daily, then I'll go down to the 4 hour, but mainly 80-90% of the time on the daily time frame. And they work well for several months, sometimes for a year or even longer. Because they are weekly SR levels, right? So if you have many daily touches on it, that means there are weekly SR levels. If I have at least one or two, if I have at least two weekly touches on a weekly candles touch those levels, then I consider them as weekly SR levels. Now, these levels, as I've been saying this week, are not confirmed yet because price hasn't touched them enough. Now, having said that, 2882 has been touched 4 times already. So I think that's pretty much a permanent level that's going to stay there, 2882. But I want to take a look at, I want to see a couple of more maybe daily candles close, or 2, 3, 4 daily candles close, to see how 2929 performs, right, as a weekly SR level. And the same for 2834, because we've had only one touch. You can say here price touched it, and here, so just 2 touches. I would like to see another touch of 2834 before it becomes a permanent SR level on my chart. Okay, let's go to our trading chart. Before we draw our zones, I always do a recap of the trade that I took and a setup that I may have given towards the end of the stream. If you want to listen to any of my setups that I give out, I give it out in the last 10 minutes. So if you want to check out the validity of these streams, just watch the last 10 minutes of any stream. That's all you have to do. You don't have to waste your time with the education and the analysis. Don't waste your time with any of that. If you just want to see the validity of these streams, just watch the last 10 minutes of any stream, right? So yeah, yesterday I had taken sells. Let's go there to the cells that I've taken. I've taken it on the 15-minute time frame. We had news. Yeah, we had. I think I took it. Did I? Yeah, I think I took cells, right? And yeah. I did take out cells, and I got out at 2907. I had this price level on the chart, and I said if we come further down, it'll be 2905. But we didn't get further down. So when price came here, I closed most of my positions. When there was a 15-minute bull candle close, I closed the rest, right? And that's it. I had a winning day yesterday. Then I said, and the reason I took sells is because price had rejected the London high. I explained all of this yesterday. That was the reason I took the trade, where I placed my stop loss, where I entered, where I took profit. All of that was explained, right? When I took the trade, it was a live trade that I took. Then I said in the last 5 minutes, 5 to 7 minutes, I said there are no more sells on the chart, but look for buys. Wait for M30 support to form to take buys, right? And M30 support did form here, but I said wait for a strong bullish candle, not a doji. That's a doji, right? That's a bullish kind of doji. That's a weak bullish candle. I don't consider that is support, but that's not enough. That's not a trading candle. It's not an M30 bull candle I want to trade off of, right? So for example, if I have a candle close like this, I'm not going to go down to the M15 time frame and check to see if there is a trading opportunity. There might be, there was, but not for me. I need to see a better close. I need to see if the bull candle closed up somewhere here above the London high, I would have taken this. Closed right at the London high. It's fine. It closed at the London high. That's absolutely fine. That's a valid trade. But just the fact that there was a big rejection here and we closed almost a doji, that was the reason that I didn't consider this as a trading candle. Now, don't get me wrong, this is M30 support. This is M30 support, but it's not a trading candle to me because of the heavy rejection from the top, and it closed very close to a doji, a bullish doji, right? But we closed at the right place. We closed exactly at the London low. That's fine. That's absolutely fine. It was a correct close, but the problem was that it had a huge wick at the top. So to me, that looked like more like a doji. Now the next candle was a perfect candle, but that was too far out. Price did not pull back after that, so there was no trade on that candle because the next candle I need after the candle to close. If this was the M30 support candle that formed here, then I need the next candle to pull back to get entry, and we didn't. Fine, so no trade. There were no buys. But if you waited further on for the next couple of hours, because I give out my setups for 1 to 3 hours, right? Here we form perfect M30 support. That's a support formed, perfect bull candle to push up. And that candle closed at 1930 IC market server time. If you go down to the 15-minute time frame, and that's where the candle closed. This was the close of the 30-minute candle. And then you can draw the fib based off two previous M15 highs being taken out. This candle took out this side, this candle took out this side. Yeah. So draw the fib. Price comes, touches here perfect, touches again, does not break this low, does not break below 2913, right? And that's a very tight stop loss. So you can place it under the 30-minute candle low. That's about a 16 pip stop loss, and you can write that trade. And why? How can you write that trade? Because I said I said this yesterday and day before that we've taken out the liquidity in this candle, in this liquidity candle, right? The liquidity on the candle is done because there's a 5-minute candle there. If you watch the first 30 minutes of yesterday's stream, the analysis is very clear. 30 minutes of yesterday's stream or the previous day stream. There's a 5-minute liquidity candle there that we had marked about 3 days ago, about 3 days ago. And prices crossed the 50% mark already. It came up, it dropped down, came up and crossed the 50% mark. So the liquidity of that candle is consumed, right? So I said the next time price did come there again, it crossed the 50% mark again, right? Here when it came up, it crossed the 50% mark. That was the liquidity candle, and it came here and crossed the 50% mark again, right? So I said the liquidity on this candle is done. So you're anticipating price to go through that liquidity candle, and that's exactly what happened. All right, price eventually you got entry and price pushed right through that candle. So you can hold your TP at the end of the candle, and that would have been your stop loss and your entries and your TP. Okay, so that was yesterday's trade idea. Now if there is a trade idea today, I'll do that today as well. I'll give out a trade, so if there is one, right? But generally there is always one, and I do always give out 1 or 2 trade setups depending on how candles form. Now let's clean up the chart. Okay. Okay, so there isn't much supply. We're going to get rid of this candle. That candle is done. Okay, before we look at supply, let's get rid of all of that. Let's move all of that to the right. We have come, yeah, it's a 200 pip zone. We come 175. We can get rid of that. It's not a high liquidity zone anymore. Okay, so we've just got demand and we've got nothing to the left because this zone is all consumed. You might have to narrow this down a lot more because price has come deep into it. But before, yeah, let's do that now. Okay, so let's go down to the 1 hour time frame. Otherwise, this is a problem. Let's go down to the 1 hour time frame and see how more we can narrow this down. Probably there, right? Yeah, that's okay. Maybe 15-minute. Yeah, that's better. Prices come deep into it. No, we're gonna have to go there. Yeah. Okay, so I've used the open of the candle because there is a base there on the lower time frame, but obviously it's not visible on the time frames that I have. Maybe on an odd time frame it might be visible, but on the 15 and 30 it's not very visible. So I'm going to use the close and the drop. So this is the rally and then the drop. So I'm going to use that wick as the base. Okay, 393. Let's put the numbers there. Just a second. Yeah. Okay. I'm going to relabel that as H1 supply because that's all it is right now. It's just basically on the 1 hour time frame, we have a rally and a drop, and that's all the zone. There's no other supply. There's absolutely no other supply, right? Um, on the 1 hour, we can actually narrow it down further. This is a rally and two basin candles and a drop. So that open is 525. This open is 531. 5. Okay, that's better, right? So that's the 1 hour supply zone that we have, right? Um, based off rally based drop and the previous zone there, the high, because we haven't broken through it yet. Let's go down to the 4 hour again and look for our demand levels now. We got a rally based rally here, right here, very close to that supply level. Okay, there's a rally, one basin candle and a rally. That's a leg out. And then below this we have another one here. Now keep in mind it's a Friday. We're going to have pay attention to volume, and we'll do that in a bit, not right now. Let's first finish the analysis. So that's a rally, two basin candles and a rally. Let's put the numbers on that. 771 333. Okay, and this one 808 592. Okay, and I don't want to overlap this, so let's bring this down. Okay. Yeah, so you can maybe bring this also. Extend this also to the right. If you want to see how these zones are drawn, just watch the 30 minutes of yesterday's stream. The analysis is always done. The streams are structured in a way that the first 30 minutes, sometimes 35 minutes, on days like this where I take it very slow, it might be like 30, 40 minutes of analysis. That's the prep work that goes into it. And then after that is just waiting to take a trade. And then the last 5 minutes or the last 10 minutes is when I give out a setup for after the stream is done, right? That's how the streams are structured. Okay, so that's our 4 hour demand zone. We're going to extend these liquidity candles to the right. Yeah, that should be good enough. That's 470 pips away. That's good enough for today. Okay, so we have this supply that has been heavily tested several times. Prices move pretty slowly though, right? Just keep that in mind. Prices moved up very slowly. We had a big push up, about a 450 push up with two 4 hour candles, And then we've had another similar 450 push-up in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 11 candles. So let's say 10 candles to push the same amount of pips. 450 pips in 2 candles a couple of days ago because that was CPI. And then since yesterday, we've had 10. So the last 40 hours, we've pushed up the same volume, the same amount, right? The same volume in 40 hours. So you can see price is slowing down. That's all that it's saying. Price is slowing down, right? Just keep that in mind. It's slowing down as it gets higher and higher. It's slowing down. The momentum is dying. Keep that in mind, okay? All right. Okay, so the next thing I do is identify if these zones that I've drawn, if they are high liquidity zones. So let's go down to the 1 hour. It's clear on the 1 hour. So we have a demand zone here, 4-hour demand zone here, that has pushed price up and pushed above these highs. So you have a drop, base drop, and we've gone up here and broken this high, this base here, right? So this base is about a 56 pip base. We've broken that, so this is a high liquidity zone. Then we have this here that has taken out this zone, right? So price started here, pushed up and took out this drop, base drop. So this high here, right? So let's say this was the zone. It's a 119 pip zone. Price pushed up and took out that high. So this too is a high liquidity zone, right? So those two are high liquid. Is this a high liquidity zone? Not anymore, because we've come past the 50% mark now, right? So I don't consider that to be high liquidity zone. And those are our zones. Those are my zones for the NY session, right? Now the next thing I do is I identify if price needs to go up, it needs to grab liquidity. It can do so at 2929, which is a weekly SR level, or at the zone. If it does come to the zone, is there a liquidity candle in this zone that can hold price and push it back up, right? So let's go down to we are on the 1 hour time frame. I basically look for the largest candle in this zone. So that's a 53 pip candle. Just keep that in mind. Go down to the 30 minutes. Doesn't seem like there is anything here. 30 pips. There is this candle here. Let's go on the 15 minute. Yeah, it's still that candle. 40 pip candle. That one right there in the 15 minutes, right? That's the candle. And price has tapped it already. Look at that. Price has tapped it already and it's trying to push up. So that's a liquidity candle right there in that zone. Let's put the numbers on that. 897491. 897491. Okay. All right. Now we do the same thing for the zone below. Right, so go on to the 1 hour time frame, look for the largest candle. The largest candle seems to be this one. It's a 108 pip candle. It's also 108 pip candle. Yeah, it's 109 pip candle. .30 minute is 102 pip candle. The 15 minute is 85. It's also 85. It's 93. '86. 93. $86. Let's go down one time frame. Yeah, that's the candle. That's the candle right there. And we've tapped into it. It's a 93 pip candle. We've come 47 pips. We've come to the 50% mark, just at the 50% mark. So there might be liquidity in it still. 7747. Okay, perfect. Done. Right on time. That's the analysis. Even though we started late, that's the analysis. Okay. Yeah, that's the analysis. So yeah, so price is very bullish. From the weekly, daily, even the 4 hour, we haven't closed a bearish candle yet. So still on the 4 hour, we're still bullish. On the 1 hour, we're beginning to turn a little bit. So weekly, daily, 4 hour, we're bullish. On the 1 hour, we're kind of bearish, right? Got to keep that in mind. And remember what I said, that price seems to be slowing down. It's slowing down, okay? That doesn't mean it's going to reverse. We want need to see price come to a liquidity area and grab liquidity and push down, okay? Yeah, just a second. Okay. All right, so we've still got about 30 minutes to wait, about 28 minutes to wait until news. There's plenty of waiting to be done. We're going to take a look at what price has done so far in the Asian and London sessions, right? So we might have a better idea of what price could possibly do in the NY session. Before I do that, I just want to take a look at this rejection here on this wick. There's a wick here. It's an 85 pip wick, 85 pip wick. Let's take a closer look at that. Seven 770. Yeah, we've gone past that liquidity candle. Just mark this candle for a second. We'll see how far it went. 152, 138. 152, 138. Yeah, we've gone deep into that candle. We've formed resistance already here. Yeah, we should break this low. We should break this low and come further down. Let's see, I might look to take sells for retail sales. Let's see, just like yesterday. Yesterday we did sells and price did come down, right? Something similar might happen. Yesterday we had good news, right? The news was good. It was so basically the result was good. So generally they follow the same thing, right? So basically if you have generally, right, there is a and when I say generally, I mean like 60, 70% of the time, right? If CPI results are good, then PPI results are also good, are positive, and retail sales results are positive because they're all connected, right? Retail CPI, which means consumer price index, and PPI and retail sales, they're all connected. So if the major one is positive, the other two also are very likely, not always, but very likely that they're positive. Okay, just one second. Okay. So if we have positive news, we might just drop, and we might drop to this. We've tapped, we might drop here. Let's look at the 4 hour. Yeah, we might drop here and then push up later on, just like we did yesterday. Later on, we might push up, or we might close bearish below 2929. The daily could close bearish below 2929, leaving a top wick for the weekly candle, right? Does that make sense? Because I said at the beginning, the weekly candle may need to leave a top wick. Not needs to, it's not, there is nothing certain, uh, but may need to, because a lot of weekly candles usually they have top wicks, right? So this candle has no bottom wick, so it might leave a top wick, right? So for that to happen, the daily might need to close bearish, right? So which means the daily candle will need to close below 29.29. So if we get positive news, we could have a pullback, grab liquidity, and push straight down, and eventually come back towards 2900. And on the weekly candle, it'll look like price heading towards 2900, but that might be somewhere on Monday, right? That's possible because let's see the 286. Yeah, the candles are the volume is decreasing, right? For the week started with a bang. That's a 565 pip candle. I think the next candle was larger. Yeah, that was a 600 pip candle, and then we started decreasing in size. That's a 450 pip candle. This was a 300, 298, yeah, 290 pip candle. So you can see the volume dying down. The volume is fading, right? So we might not come all the way to 2900. It could. We're just uh, analyzing on what we see on the chart. I'm just making predictions on what I see by what I see on the chart, right? It's always a calculated guess. So that's 180 pips. Yeah, we might come down to about 250 pips. So we might not reach 2900. So let's see. During news, we got another 20 minutes to news. I'd probably look to take sells, but I want price to pull back up, maybe tap 29.29 and then come down here to this zone. If I do get a trade there, then that's about 100 and 110, 120 pip drop, right? If you come there, yeah, around to this support here, yeah, right? Let's see. Let's see. We formed M30 resistance. That's a good sign. Yeah. Okay. Okay, let's take a quick look at what price has done so far, Asian and London sessions. Just give me a second. Okay, so the market opened there. That's the market open. Let's just zoom in. All right, that's the market open. Price pushed up. Yeah, it's the Asian high. Okay, Asian high, Asian low. Yeah, yeah. Okay, that's the London low, 064. So Asian high, 4006. Okay, let's just check this once more. Market opened here. Still largest swing high, 30, 15. Yeah, perfect. Okay, so in the Asian session, we moved about 100 pips. In the London session, we moved also about 100 pips, 100 pips each in each session. So in the Asian session, price, the market opened here, came up, grabbed liquidity from this liquidity candle that we marked here on the 5-minute. Towards the left, there's a 5-minute liquidity candle here. Let me just pull that up again. That candle right there. Okay, that's a liquidity candle. Let's go back to the 15-minute. So price came up, grabbed liquidity, pushed down, pushed below 29.29, came back up, grabbed liquidity again, came down. Then, because we are bullish, we grab liquidity from the from the EMA, pushed up, closed above the Asian high, and back in that liquidity candle. Now there is volume going up and there is volume coming down because this is a liquidity candle, right? So there's volume price pushing up because we are bullish, and we've grabbed liquidity from the liquidity from the EMA. So there's volume pushing up, and then there's volume pushing down from this liquidity candle. So we're in bit of a range here, right? In this about 120 pip range or 100 pip range. So price is pushing down and pushing up at the same time. Then we pushed down, we created the London low, pushed back up, closed back above the Asian high again, pushed up, grabbed enough liquidity, created the London high, and now we closed at the Asian high. We should be heading towards the Asian low, right? That's where we should be heading. We've also closed below the London low, right? So on the 30-minute time frame, yeah, we're just about to close this candle, this 30-minute candle, closed right at the London low. So that's a good sign. We should be pushing down, right? And we should be coming minimum to the Asian low, and we should head lower. Once we break this liquidity candle, this is the low. This low is 24.91. Once we break this low of this candle, price should then drop easily here. That's another 70 or 75 pip drop, right? So that's the move I'd like to take. Price to pull back, grab liquidity, push down. We've got about 15 minutes for news. Let's see what happens. That's the analysis, right? We've rejected, very similar to yesterday. Created the Asian high. I'm sorry, we created the London high, closed below the Asian high, tried to come back, retest it, failed to do so, pushed, closed right at the Asian low, closed a bearish candle right at the Asian low, formed resistance, and the next candle has broken this low already. So it's very likely that we're heading towards the Asian low, right? That should be a drop of 57 pips and continue down about 120 pips in total. Let's see if we can get entry around the Asian low or even here. Let's look at the 15-minute time frame. So this high is 3160, this high is 3140. This candle broke this high, and this candle broke this high. Yeah, it's got to wait for the candle to close. But if the candle closes like this, then this is how I would draw the fib. Okay, that's how I would draw the fib. Yeah, I'm going to wait for the last, maybe wait for the last 5 to 7 minutes. We should have a pullback and then a drop after that. Yeah. This candle broke this high. Safer stop loss would be above the London high. That's quite wide. Yeah, that's a safer stop loss. A more aggressive stop loss if the candle closes here, right? We got to wait for the 15-minute candle to close. If the candle closes here, then the safer stop loss would be above the London high, or the more aggressive stop loss would be above the Asian high, right? Above this candle high here, because that's very close. So either above, basically above 2933.5, right? Around two, yeah, 2934. Let's say 2934. That would be better. 2934. Yeah. Fourteen 627. We could come up here. Price could come back up here. Okay, I'm taking a sell there. One sell. It's about 115 pips. 8 minutes more. So I've already taken a sell here, right? Because of what I just said. So I'm anticipating price to push down, but I'm well aware that price can come back up here to this and tap the Asian high before it pushes down. But if we close a 15-minute candle closes back up here inside this zone, inside this liquidity candle, a 15-minute candle closes up there, then I'm going to manage risk. Okay? Because that's an opposite candle closing in a selling zone, right? That's an opposite candle closing in a selling zone. So you got to be careful. We got plenty of time. We've got about 7 minutes, 20 seconds. It's a lot of time. So safer stop loss above the London high, a more aggressive stop loss above the Asian high. So basically around 2934. You could say 2934. This candle has no top wick either. Yeah, this candle has no top wick. It seems like we are pushing down. Let's see. Let's see how this 5-minute candle closes. I might take another position based off the 5-minute candle. It's 50 seconds. I would like to get high on an up here as far as possible. Take another position there. As high as the better. Yeah, we're closing bearish, rejected that area, and we're pushing down. We should break this low. This 15-minute candle should break this low. 4 minutes more. We're coming down. Yeah, there you go. Should break the low. Should break this low. This candle will break. There you go. 34. Yeah. Might have a pullback though with news. Might have a pullback. If the candle opens with no top wick and just drops, then we're going to have a pullback later on. Going to have a pullback later on, so be careful. We might not have volume to come all the way down, so it might come drop somewhere here and then pull back up all the way up and then come down. So you got to be careful. Got to be careful. But we have to clear this. I need to see a 5-minute candle close below the Asian low. for price to drop here down. Right? So basically, the daily candle has to break its own low. The daily candle needs to break its own low because the whole idea is we're anticipating price, the daily candle to kind of close bearish, right? To create that weekly candle wick. That's the idea. It's just a very broad idea. It's I work off what price action is telling me on the lower time frames, but it's a very broad idea that yeah, we might not have that much volume. It's 50 pip candle. Yeah, I might have to have another 50 pips would be here, here, and then another 50 pip candle would make it down there. Yeah, I don't know. There's a lot of volume today. It's just retail sales and it's a Friday. So you might have to just be careful with these positions. A minute and 40 seconds. So the idea is that price comes down, the daily candle closes bearish, so we grab, maybe we come up here again, grab liquidity and then we close. Let's see. I'll manage risk. If we come up here, a 15-minute candle, as I said, how I'm going to manage risk is a 15-minute candle closes back in this liquidity candle. So if 15-minute candle closes above 2932, yeah, closes above 2931. 15-minute candle closes above 2931, then I close either all of my positions or most of them, because that means we're closing back in the liquidity candle to push up. Right? So you got to be careful. 50 seconds for news. The 30-minute candle looks like it's closing bearish. The 1 hour candle also, no, the 30-minute candle looks like it's closing bearish. Might have a pullback. Then 15 seconds. See what happens. Yeah, we pushed up. Took another couple of positions there. The Asian tapped into this Asian, the London low. Let's see if he can come down. See if he can come down. We have to close below this, otherwise we're not coming down. If a 15-minute candle closes again, if a 15-minute candle closes above 2931, closes back basically inside this. I want to see a 15-minute candle close inside this. That means that I'm going to close my positions. What was the result? Oh, it was bad numbers. It's bad numbers. Like I see, as I said, it's not always guaranteed to be the same. I said there is a 70% chance, 50 to some 60, 70% chance that it'll all line up, but it didn't. These are bad numbers. We are pushing up. We got to be careful. Let's be very, very careful. I'm going to wait for the 15-minute candle to close. 30-minute candle closed bearish. I'm going to wait for the 15-minute candle to close. I'm not going to do anything until the 15-minute candle closes. We got time. Got about 11, almost 12 minutes so the 15-minute candles close. You got to wait. It's going to wait. We're pushing up. We're pushing up. Pushing up. 10 minutes, 10 and a half, 10 minutes, 30, 40 seconds, 10 minutes, 40 seconds. Got to wait for the this candle to close. If it breaks this high, then I might close a couple of positions once you break this high. I'll keep some and I'll wait for the 15-minute candle to close. If it break above 2933, then I'll close a couple of positions. Always have to manage risk. You have to find a way to manage risk. Yeah, we're moving up. When you break the high, I'm going to close a couple of positions. Yeah, we're pushing up. It's trying to create that bottom wick to push up. Another 7 minutes, 7.5 minutes more. 7 minutes, 40 seconds. It's going to wait for this candle to close, 50-minute candle to close before I decide to do anything. If the candle closes above the London low, like I said before, I manage risk. I'll close maybe all of my positions. Yeah, probably all of them. Close all of them. All of them. Because that means we're closing above the London low, and it's very likely that we're going to push back to the London high. So it makes no sense in holding anything. You've got to close everything. But you got to wait another 7 minutes. And once you break this high, then I'll close. Yeah, we created the bottom wick. We are pushing up now. Yeah. Okay. We created the bottom wick. We're pushing up. So I closed a few of my positions. Always got to manage risk. Always got to manage risk. Now I lose less. So I manage risk instead of waiting for price to get up and close bullish and get up to this Asian high. I manage risk. Now we wait for the 50-minute candle to close. Yeah, we're pushing up. We're pushing up. Pushing up. But I've closed quite a few of my positions, so now I'll lose less than what I intend to lose, obviously, right? Because I manage risk beautifully here. So now I'll lose less. When the 15-minute candle closes and I close my whatever's left, if it closes above the London low and I close whatever's left, then I lose less because I didn't wait for, I didn't hold all my positions uh, to wait for the 50-minute candle close, right? Soon as we got up here, 2933.14, I manage risk. If we close below, then I can add my, if we close below, if I see, I'd like to see a 15-minute bearish candle close, then I can add back my risk. Let's see. The 15-minute candle has to, this 15-minute candle has to close bearish below 29.29 for these sells to still be valid, right? This candle has to close bearish, not at it, not at 29.29, but below it, right? For sells to be valid. If price breaks the low, then I'll add back risk. If this candle comes straight down and break the low before the candle closes, then I'll add back my risk. Seems like we are coming down now. And if it does, that means the 15-minute candle will also close bearish. It's got to wait another 3 minutes, 3.5 minutes. Yeah, it seems like we're coming down. If it breaks the low, I'll add my risk back on. Yeah. We broke the low. Grab liquidity, we broke on the low, wait for the 15-minute candle to close. Let's see how the 15-minute got another 2 minutes 50 seconds for the 50-minute candle to close. Now we have a liquidity grab. If the candle closes like this, we have a liquidity grab. Right, on the 30 minute, on the 15 minute, we have a liquidity grab. We grab liquidity from the liquidity candle. See where the wick is? The liquidity candle. Then that's a sign that we're coming towards, yeah, we're coming now. Grab liquidity, we've broken the low, we should be heading down. It's about 76 pips. It's 120 pips, 115 pips there. Yeah, 115 there. Yeah, we're coming down now. A minute and a half, a minute, yeah, just over a minute more for the candle to close. So I'm looking at 2919, 2918, roughly 2919, 2918. Yeah, because we have support there. And we got a liquidity candle, so you want to get out. Yeah, so there was no pullback. I was hoping that price would pull back up, but as soon as it broke the low, I took some positions. Yeah, there we go. Yeah, hit TP, put stops at break even. There we go, done. Okay, that was the trade. So from these positions here, I got about 120 pips, I think, here. Yeah, 120 pips here on those two positions, and on these below ones, about 75 pips, 70, yeah, nearly 80 pips, 76 pips, right? 76 pips on these three positions. Now, is it smart that I closed my positions? Of course it is. Absolutely. A 100% yes, that I closed these positions. Now, if I held them, would have had more gains? Of course I would have had more gains. But we don't know that. I don't know that. I only know what the only information that I have is what candles are printing. And when price goes back up to this high here, and just about to break, it didn't break it by the way, but it tapped that high, right? It didn't break above the high. When it tapped that high, the next 1 minute candle, let me just go up. This candle tapped that high. It tapped 293314, right? This is 293311. Okay, short by a few points. So you can consider that it tapped that high. The next 1 minute candle could have easily broken this high and gone. And if it did, instead of losing 30 pips on that trade, I would have lost 50 or 60 pips. So why lose more than what you plan to lose? Why not lose less than what you have planned to lose, right? Because that's a very possibility. This 1 minute candle closed bullish. The 5 minute candle closed very bullish. The next one could have easily broken the high and headed up, right? So when price got there, when this candle broke this high, that's it. I closed 3 of my 5 positions, right? Because the likelihood of price continuing is higher, right? The likelihood of price going down was was cut in half because price can go up, right? So that is why I cut. Do I regret it? Absolutely not. I would do that if this happened 100 times, this is exactly what I would do 100 out of 100 times, right? Manage risk, because that's the one thing that you can control for sure. There are other things also that you can control in trading, but managing risk is one thing that you have to control to be a profitable trader. You have to, absolutely have to control it to be a profitable trader, right? There's no other way. You have to control it. Yeah, and we closed a massive bearish candle. Once we grab liquidity, when this 15-minute candle grabbed this liquidity and came past here, this huge wick, I've always said this, if you watched any of my streams, if there is a massive wick from a liquidity candle, that means price has grabbed liquidity from that liquidity candle and it's pushing in the opposite direction. And that soon as I saw that, that is why I confidently loaded up positions. Now, could I have I been wrong? Absolutely I can, because there is no certainty in trading. Price could have come here, I would have entered here and price could have gone back up again, right? That's the risk I'm willing to take. And if it did it again, if a 5 minute, if a 15-minute candle closed back up here again, I would again manage risk, right? Because that is my risk management rules. So I have very strict risk management rules based on price action, and then my entries and my trade management is also based on price action. So when I see a big wick like this, price grabbing liquidity from the liquidity candle and coming down to break the 30-minute low for the previous 30-minute low, that means price is heading down, right? Because we've grabbed a lot of liquidity. So there's sufficient liquidity now for price to come up to the minimum area. The minimum area is 2919. I said 2918, 2918, 2919. Why 2918 or 2919? Because that's the next liquidity candle. That's exactly where the next liquidity. If you look, we did this on the 5 minute. Was it on the 5 minute? Yeah, on the 15 minute. That's the next liquidity candle. Exactly at 2918, right? And that's where price came. Tap 2918, pushed up 37 pips. Now, can price come down if it's further down? Of course it can. Can price push up? Of course it can. Anything can happen because if price doesn't find enough liquidity here to push up, it'll come down, right? That's how price action works. That's how the market works. That's how price charts work. Price will move until it finds enough liquidity, and then it'll go in the opposite direction. And that is why I do these charts, I draw these zones, because this is my roadmap for the session that I'm trading. It tells me, it shows me where price can possibly go to. So now it seems like it's coming down. It might come down further. I don't know. We'll have to wait and see. But there are no sells now because we've already tapped the liquidity candle. So there's absolutely no sells now, right? You got to wait. And there are no buys because there is no M30 support form, because now you're trying to take a counter trend trade. Price is below the EMAs. Price has pushed down 225 pips since the London session. We've pushed down 225 pips. So we're very bearish right now. So you don't want to just take a buy, randomly just buy. You don't want to do that. You want to wait for confirmation. And because now because price has moved 225 pips to the downside and is below the EMAs, now what you're looking for is actually a counter trend trade, right? Because price is below the EMAs and has made a massive move down of 225 pips, right? So you want to wait for 30-minute support to form. Again, same principle as yesterday. Wait for 30-minute support to form. So not this. Even though you might get a trade here, that's not a trade that I would take. That's a better 30-minute support. This is support. Don't get me wrong. This is 30-minute support. But this is not a 30-minute trading candle. Okay, there's a difference. This is 30-minute support, but it's not a 30-minute trading candle. This is 30-minute support and is also a 30-minute trading candle. Okay, so that's the candle that you want to wait for, a candle like that, or a candle like that, or a candle like that. Not for this, not for this, or something like this, something like this, like this, like this, or like this. You need to see a candle, a strong bullish candle that forms 30-minute support. That could be a possible trading candle, right? To push price back up, but you need to wait to see that. And that might happen with after the NYSE opens. There is a good, we are now getting closer to the NYSE open. There's about 40 minutes, I think. Yeah, about 38 minutes to the NY open. 38 minutes to the NY open. So it's very likely that price, we just range now. We just range. Let's look at the daily. The daily is flipped bearish, sorry. The daily has flipped bearish and broken its own low, right? So the daily low was here. If you remember, this was the daily candle low, the Asian low. That was the wick of the daily candle. We've broken that low and we've created a new low now, right? So if you want to take a trade in the next hour or 1.5 hours, if you want to take a sell trade, Don't sell now. Wait for price to pull back up. Create M15 resistance right now, because the reason I say M15 resistance is because now you're taking a trend trade, price is moving down. Okay, so you can wait for M15 resistance or M30 resistance. M30 resistance is always better. If you trade, if you're a session trader, let me say this, if you're a session trader and you trade off, if you just have these two rules, two simple rules, I'll give you two simple rules as a session trader for session trading gold. Okay, it might work for other pairs as well, but for gold, if you always wait for 30-minute support or 30-minute resistance to form before taking a trade, that's number one. And let's say, for example, you take buys and then there is 30-minute resistance form. You're in profit and then 30-minute resistance form. And you close your position. You close at least, if you don't want to close the full position, maybe you close 75% or 80% of that position. If you just do these two things, so your entries, you wait for 30 minutes support or resistance to form to take your entries. And for risk management, you always close your entire position or at least majority of your position, 75, 80%, so above 75%, north of 75%. You close that when you see an M30 candle close against you. If you just do these two things, trading gold, session trading gold, do that for 2 weeks and see what happens to your results. Just do that for 2 weeks. Nothing else. If you're new to trading, if you're new to trading gold, if you're new to price action, if you're new to liquidity, if you're new to whatever system that you use, whatever indicator that you use, whatever, if you're using a robot, a EA, anything, whatever you use, if you just apply these two rules that I just mentioned. I've been speaking about these rules broadly almost every day, right? But I'm putting these two rules together right now. Okay, for the first time, I'm speaking of them as one. If you apply just these two rules for session trading, wait for 30 minutes support to form or 30-minute resistance form to take a trade. Now, how you enter is entirely up to you. You can use my M15 fib model, the way I trade. Okay, this is the 15-minute. This is a fib based off the M15 time frame. So I call it an M15 fib model because it's not your regular default fib. It's different, right? That's the way that I enter. That's the way that I've been entering for years and years and years, right? You can enter however you want, but wait for 30 minutes support or resistance to form, and then when you're in profit, let's say your price is running in your favor and you have a 30-minute candle close against you, right? A 30-minute candle close in the opposite direction. Best is to close 100% of your trade. Best is to, if you're a new trader, best is to close 100% of your trade. If you don't want to, and you feel like, no, I don't want to close everything, I want to keep something, okay, close 75% or 80%, at least 75%, at least 75%. Just these two things, and check your results after 2 or 3 weeks. Let's say 3 weeks. See how you perform, how your performance is, what your gains look like. Okay, so we're going to wait for how long have I been here? Yeah. I'm going to be here for, I'm not going to be here for too long. It's a Friday today. I've taken a trade. If you did take this trade with me and you did get out at 2918 or 2919, well done. If you didn't and you're going to, and you want to look for a trade if you're going to be at the charts for the next 1 to 2 hours, 1 to, let's say, a maximum of 2.5 hours, another 2 point, let's say, yeah, now it's 30 minutes to NY open, so NYSE open, so yeah, about 2 hours, right? If you're going to be at the chart for the next 2 to 2.5 hours, I will give out a couple of trade setups, not right now, maybe in about 5 or 10 minutes from now. For you can either take those setups if they do form exactly where I say that it will, or you can just come back in a couple of hours and see which one of the setups that I said played out. right? Um, yeah. So, but I'm not taking any more trades. I'm done. I got a decent push down, 100 and I think 115, 120 pip move down here. Yeah, yeah, about 120 pips on those two trades and about 76 pips on these ones here, somewhere there. Yeah, about 76 pips. Um, so that's it. I'm not taking any more trades. Okay, so I'll be back in about 3-4 minutes, and then we'll discuss what could possibly happen in the next couple of hours. Okay. But keep in mind today is a Friday. Don't try to force any trades. If you really want to trade, take a trade, then wait for candles to form and close. Okay, we'll discuss how candles, where they're going to close. We'll discuss all of that in the next 10 minutes before I end the stream. I'll be back in about 2-3 minutes. Okay, so 30-minute candle closed bearish. All right, just a second. Oh, yeah, okay. All right, so 30-minute candle close. Okay, so here's the now, if you remember what I said at the beginning, that the weekly candle needs a top wick, right? This could be the top wick. For the weekly candle to have a top wick, um, at least a wick like what it has right now, or even a bigger, anything above 200 pips, right? The daily candle has to close bearish, and the daily candle has to close below 29.29, right? That was the idea. That was the the macro idea that I shared right at the beginning of the session, right? Before when we were doing our pre and the prep for the for the NY Open, that was the idea. For the weekly candle to have a top wick, the daily candle has to close bearish, and the daily candle has to close below 29.29, right? For the weekly candle to have at least a 200 pip wick, a 200 pip top wick or more, right? 200 pips or more top wick. Now, the daily is now bearish, right? Now, if it doesn't close like this, right, then, and if it closes bullish, that means the weekly candle will have a very little top wick or no top wick at all. And price will go up and close above, and the weekly candle will have very little top wick or no top wick, just like the bottom wick. How the weekly candle has no bottom wick, it could also close with no top wick if the daily closes bullish, right? So two scenarios can happen. Two scenarios could happen, right? Price can range. Scenario number one, price can range, okay, and move very slowly, range for the rest of the NY session, at least for the next 2 to 3 hours, range, and the daily candle closes bearish. A small daily candle just like this closes, but maybe it comes a little bit more down, maybe pushes up after that, but basically price range, right? In about a um, yeah, in about a 150 pip range, price just ranges. That's one scenario that could happen. Because it's a Friday, we could just range. So so towards the end of the NY session, what would happen is the daily candle, as we anticipated, would go close bearish and would close below 29.29. That's one scenario where price continues to range, right? We might have a move down, then a move back up, then a move back down. So these candles might be a bit big candles, might be the 15-minute candles might be like 40, 50 pip candles, but price ranges. That's one scenario. The second scenario is that the daily candle closes bullish above 29.29. That's the second scenario. First scenario is that the daily candle closes bearish, so the move has already happened. So for the rest of the session, for the rest of the NY session, we kind of push down, we push back up, push down, and we range. The second scenario is that the daily candle closes bullish. Okay, it closes bullish. For that to happen, there has to be a move up, a, a move of price pushing back up 150, 140, 150, 160 pips or 180 pips, price to push back up. That's the second scenario. If the second scenario plays out, then what you want to see is 30 minutes support created. All right. Now, if it's the first scenario, there is nothing you can do. You can't take any trades because the move has already happened unless you wait for price to so if you want to trade based on the first scenario, what you would do is wait for price to pull back up because we're expecting the daily candle to close bearish. So you would wait for price to pull back up, create M30 resistance or M15 resistance and take a trade to come down, right? But you would have a smaller TP because the move has already happened and you're expecting price to kind of range and not push all the way down, uh, 300-400 pips all the way down, right? You're not expecting the 250 or 300 pip move down, right? You're expecting price to close bearish because we've had less volume, less and less volume throughout the week. So when and kind of anticipating a bearish candle close, about a 250 to 300 pip candle, roughly daily candle, right? So for that, the trade idea for that would be wait for price to pull back up, create M30 resistance. That would be better, right? You can take M15 resistance also, but better always M30 resistance. Like I explained, 10 minutes ago, I gave you guys two rules. Wait for M30 resistance to form and then take a trade to come back and retest this low or come back to the liquidity candle, right? That's your TP area. And your stop loss for that would be above the M30 candle high that created resistance. So that would look for a 30-minute bearish candle to close, and the stop loss would be above that, and wait for the next candle to pull back and take the trade. Or you can use the M15 fib model, right? For that, you would have to drop down to the 15-minute time frame and look for two you would have to look for at least two M15 highs to be broken, draw the fib just like I did here, and take the trade for price to come down. That is the first setup. The second idea is for price for the daily candle to go back and close bullish. For that to happen, wait for 30-minute support to form 30-minute support. From where? From one of the liquidity areas, from one of these liquidity areas, right? So either the liquidity candle, there's another, if the liquidity here is not enough, then price could push down here. There's a liquidity candle here, and also there's a BRN, a psychological round number here, big round number here, right? So any one of the liquidity areas, wait for 30-minute support to form and take a trade up. If the 30-minute support forms inside a liquidity candle, the safer stop loss is always under the liquidity candle low. So this is the liquidity candle on the 15-minute time frame we are drawn. This is the candle. Under this low is so basically around 2908. That would be your stop loss, and take a trade, but you got to wait for clear 30-minute support to form, just like it did here. All right, clear 30-minute support, not a doji, right? Don't wait for a doji like this. You got to wait for a candle, a clear candle like this, like this, like this, like this, like this, even like this, right? Or even like that. That's fine too. 30-minute support to form. A more aggressive stop loss on those buys would be putting your stop loss under the 30-minute candle low that created that support, right? The more safer stop loss would be under the liquidity candle low, right? And where would your TP levels be? Again, back at the weekly SR level 2929, and maybe the liquidity candle, which is 2931, right? So 2929, 2931, that would be your TP levels for the buys, right? Does that make sense? Any questions? Please ask me. I'll be here for another 3-4 minutes. Yeah, it's a Friday. Just, yeah. We're pushing back up. That doesn't mean that these are buys. Please remember that. This does not mean that they're buys. They can be. They can be buys. If you're trading off the 5-minute or the 15-minute, if you're a scalper, of course it can be buys. But as per the way I trade on these streams, the kind of playbook that I have, or the trade plan I have, or the rules I have, whatever you want to call it, there are no buys yet. Got to wait for 30-minute support to form, and then the pullback, and then the trade, right? So when I say, let me give you an example. I did this at the beginning of the session also, I'll do it again. So this is not a tradable 30-minute candle for me, though it's M30 support. And this one is, but then price didn't pull back. This one is 30-minute support and a tradable candle. Wait for price to pull back. You see how price pulls back? at least to the middle of the candles. That is why I go down and I draw the M15. I use my fib because then it tells me where the optimal or sniper entries are for that trade, right? And then I know where to put my stop loss. Stop loss can go under the 30-minute candle low or under that entire swing low, right? Under that there or under that low, right? Any of those lows are fine because they're very close to each other. Either of them are fine, right? So that's the that's what I mean by wait for a pullback and then take the trade to go up. So wait for price to wick at least to the 50% mark or just above that, around the 60% mark, and then take a trade. Okay, so now these can be deleted because prices come to the next zone, so you can delete all of these. Yeah, all of that can be deleted because prices come to the next liquidity candle, right? We've gone through that. Okay, I guess there is no questions, so I'll end the stream in a couple of minutes. Okay. All right. So again, another 11, just over 11 minutes for the 30-minute candle to close. Wait for the candle to close. Don't don't try to buy. Wait for the candle to close. The 15-minute candle has closed bullish, but has closed below the London low. So this could be a top wick for price to push down. Be very careful, right? Be very careful. Wait. Let's look at the 5-minute. We have a strong bullish engulfing candle. That's a good sign, but price will come down. Let's look at the 1-minute. Yeah, I wouldn't take buys here. I would wait. Even though price is pushing up, I would always wait for 30-minute support to form. Even though it's a grabbing liquidity, and we have a 5-minute grab of liquidity, I'll wait for that 30-minute candle to close. And if it closes above the London low, that's even better. That's even better. If it closes above the London low, then that's a very good. I'm sorry, the Asian low. This is the Asian low. If it closes above the Asian low, that's even better. So then it's very likely that price is heading at least to the London low. If we close above the Asian low, we're heading at least. That is the minimum that we're heading to, right? That's a good 70 pips from this high. But if you wait for the retracement, you might get about 100 pips. Okay, but wait for the 30-minute candle to close. All right, so that's the end of the stream. I'll be back on Friday. So I've given out a couple of ideas, two ideas and two setups along with those ideas. Very accurate. What to watch for, right, and where to place, and in terms of accuracy, what to watch, what to look for, what candle to wait for, what 30-minute candle to look for, and then where to place your stop loss, where the entry, where the TP should be for both of them. Okay, so let's come back. We'll come back on Monday and see which one of them played out. Um, and yeah, so that'll be the end of the stream. Back on Monday, 7:30 a.m. EST, and we will do our prep work and look for any possible setups. Let's take a quick look at the week, what the week looks like next week. Um, oh, there is no trading on Monday. Sorry. So Monday is a bank holiday. Um it's President's Day, right? So no, I won't be here Monday. There will be no streams on Monday. Tuesday will start on Tuesday. Tuesday, Wednesday, Thursday, and there is nothing next week. There is no news, so it might be a low volume week, right? And then the last, usually third week and fourth week are low volume weeks. The first and second weeks are the high volume weeks because those are the 2 weeks that you get NFP and then CPI and PPI and retail sales. Now you sometimes PPI and retail sales are pushed for the third week, so then you do get volume on the third week as well. But this week, the second week of this month, we had all three events: CPI, PPI, retail sales. There is no news here on the third week of the month. And on the fourth week of the month also there is no news, so there is nothing. So these 2 weeks might be quiet weeks, right? Don't expect a lot of volume unless something had happens that fundamentally moves the US dollar, right? So what I mean by that is tariffs, right? Any global event, tariffs that are placed on other countries by the US, or any global event, right? That might bring in volume, but other than that, there are no news events. The next 2 weeks, there is no news events. Okay, so I'll be back on Tuesday, not on Monday. I'll be back on Tuesday. Okay, correction. I'll be back on Tuesday, not on Monday, because Monday is a holiday. All right. So yeah, 7 minutes. We are pushing up. That's a massive candle. We grab liquidity. See, if the candle closes here, anywhere above, let me say this, if the candle closes anywhere above the Asian low, it closes anywhere above the Asian low, that means we've grabbed a lot of liquidity. That's a 62 or 61, 62 pip wick from that liquidity candle, right? We've grabbed liquid just like it did here. You can see price grab liquidity from the liquidity candle and push directly down. So that means it's very likely that scenario 2 is going to play out, where the daily candle will very likely close bullish. So that is why once you have a macro idea, you got to wait for price action on the lower time frames to form to see which of those ideas are going to play out, right? You can't just, there are some traders who say, okay, the daily looks bearish, I'm going to only look for sells. Or the daily looks bullish, I'm going to only look for buys in my session trading. That really doesn't make sense, right? Because you have to see, you have to have a macro idea. You can have one or two macro ideas on the daily time frame. That's absolutely fine. But then you got to watch the lower time frames and see if the lower time frames are aligning with that idea, right? So if the 30-minute candle closes above, we got about 5.5 minutes for it to close. It could close above, it could come back and close a doji. Anything can happen. The 5.5 minutes is a lot of time. It's a lot of time, right? So maybe wait for the last 2 minutes or last minute, last 1.5 minutes, and then you'll know, you'll have a better idea where the 30-minute candle is going to close. So if it closes above the Asian low, that means we've had a liquidity grab from this liquidity candle, and it's very likely that the daily candle will go back up, flip bullish, and close bullish above 29.29. Very likely. The likelihood of that happening is now higher, right? And the likelihood of price closing below 29.29, a bearish candle closing 29 below 29.29, is now less. Is less because we've grabbed liquidity on the 30-minute time frame, right? So that's how you align the lower time frame price action, what you see printed on the chart, with your macro idea or your high time frame analysis, right? You got to wait for candles to close to have to have a better idea what will play out. So now the candle has moved a lot. This is a massive push up, 135 pips and still pushing. So you might have to wait for this price may not pull back on this candle. It's a similar move to this, right? Price pushed up 100 and um, yeah, 108 pips. If you include this, that's 130 pips. It's a similar move we're making. So you'll probably have to wait for price to come back down, form M30 support again to take the trade. Keep that in mind, just like what happened here, right? Because there might not be a pullback here. If there is, great. If price pulls back here, if the candle closes like this and price pulls back this level, you can take buys somewhere down here with the safer stop loss under the liquidity candle or the more aggressive stop loss under this 30-minute candle low, and look to take buys for price to come back up here. Try to get in as low as you can, but if price doesn't pull back like it didn't here, then you got to wait for price to pull back and create M30 support again to go up. Okay, all right, so I'll be here on Tuesday. Okay, have a great weekend. See you on Tuesday.